Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within corporate filings. This week, we're diving into Natural Gas Services Group, and let's just say someone's got a new exit strategy and it smells a little like a golden parachute. So we're looking at Natural Gas Services Group, and it seems like their president and chief operating officer, Brian L. Tucker, is making a graceful exit. Now, this isn't your typical I quit situation. It's being chalked up to unfortunate and unexpected family loss, which changed his personal circumstances. This decision happened back on August 5th of next year, marking the start of Tucker's transition. He'll be sticking around for a few more months with a target goodbye date set for October 31st of next year. This gives him ample time to help transition his responsibilities. And to make sure this transition is smooth, they've inked a separation agreement. This agreement, dated August 8th, lays out the terms of his departure. His last day is officially October 31st, but that can be pushed back if they both agree. During this transition period, all his normal employment agreement terms are still in play. This means he needs to make sure everything is handed over properly to the other employees as the CEO sees fit. It's all about a smooth handover. Now for the perks, Tucker will be getting a cash bonus. It's not just any bonus, mind you, it's at the target level calculated from the beginning of 2025 all the way up to his separation date. And then there are the stock units. All his restricted stock units are going to vest, but not all at once. They're going to vest gradually or pro rata, as they say, up to his final day. It's the same story for his performance stock units. These will also unlock on a pro rata basis based on the target award amount for each one leading up to his exit. But it's not all goodbyes and payouts. Tucker is still bound by his non-compete agreement. For a full 12 months after he leaves, he can't just go work for a competitor. This is pretty standard to protect the company's interests. Now, moving on to the company's performance. On August 11th, they dropped a press release with their second quarter results, which ended on June 30th. This press release itself is included in the filing, so we can get a direct look at what they're reporting. It's important to note that this press release information is furnished, not filed. This means it's for our information, but it doesn't carry the same legal weight as officially filed documents. They're essentially telling us, here's the news, but don't sue us if it's not perfectly precise. Just a quick background note, Natural Gas Services Group trades on the NYSE under the ticker symbol NGS. They're involved in providing sound high-pressure fluid transfer and related services to the oil and gas industry. Now, digging into the operations and financial condition laid out in that press release, we don't see any actual numbers here in the 8K filing for the second quarter, which is a bit of a bummer. It just tells us that a press release exhibit 99.1, which unfortunately we don't have access to within this document, so we can't really analyze what their actual financial performance looked like for that quarter based on this 8K alone. It's like being told there's a cake but not getting to see or taste it. However, we can infer a few things. The fact that they're issuing a press release about their second quarter results is standard practice to keep investors informed. The focus here in the 8K is really about the departure of the COO and the terms of his exit and the announcement linking to the financial results. Looking at the broader picture though, if we consider the executive departures and the types of agreements that are put in place, it often signals a period of transition or strategic shift within a company. When a key executive like a COO leaves, especially under these circumstances, it can sometimes lead to changes in how the company operates or its strategic direction. The fact that his exit is spread over several months and includes detailed provisions for vesting and non-compete clauses suggests a carefully managed separation, likely aiming to minimize disruption and protect the company. In terms of the company's direction, the oil and gas services sector is quite cyclical, highly dependent on commodity prices and exploration activity. Companies in this space need to be agile and efficient to navigate market fluctuations. Without the specific financial data from the press release, it's hard to say definitively if Natural Gas Services Group is thriving or struggling. But a significant executive departure often prompts questions about future leadership and strategy. Is this an opportunity for new blood to bring fresh ideas, or is it a sign of underlying issues that are causing executives to move on? One notable risk for companies in this industry is the volatility of energy prices. When oil and gas prices are low, drilling activity tends to decrease, which directly impacts the demand for services like those provided by Natural Gas Services Group. Conversely, high prices can spur more activity, leading to increased demand. Regulatory changes and environmental concerns can also pose risks, as can the need for continuous investment in new equipment and technologies to remain competitive. In conclusion, this filing primarily details the parting of ways with their COO, Brian L. Tucker, while it mentions the release of financial results. The actual numbers aren't detailed here. The terms of Mr. Tucker's exit seem to be structured to ensure a smooth handover and protect the company's interests through contractual obligations like non-compete agreements. The company's financial health and future direction will heavily depend on the details within the press release we aren't privy to here, and the broader market conditions in the oil and gas services sector. It really drives home the point that understanding the full story often requires following up on these foundational health and future direction will heavily depend on the details within the press release we aren't privy to here, and the broader market conditions in the oil and gas services sector. It really drives home the point that understanding the full story often requires following up on these foundational health and future direction will heavily depend on the details within the press release we aren't privy to here, and the broader market conditions in the oil and gas services sector. Alright, that's our breakdown of this Natural Gas Services Group filing. What's your take on executive transitions and their impact on a company? Let us know your thoughts in the comments below. If you found this analysis helpful, please give it a thumbs up and be sure to subscribe for more corporate decoding. And remember to join our Discord community linked in the description for even more insights and discussions. Thanks for tuning in, and we'll see you next time.